how it with examples of how it works, and in the second one I will cover about how to construct the one that I am using as an example, and in the third one I will give more examples of how to use what I do, how I use it personally to take advantage of the great tool which is the market breadth tool. This week I want to talk about the concept of market breadth and how I use it personally. Now, market breadth by itself has only one simple meaning. It's the number of advances versus number of declines. Now, that is a plain vanilla definition of market breadth. But when you go in depth of that metric of advance versus decline, you can classify it in many different ways to extract much meaningful information out of that data, which helps me in sort of gaining an advantage to understand what kind of conditions am I going into. So why is this important? It's very clear. Let's say the Nifty is falling by 30% from the top. It is impossible, virtually impossible, nothing is impossible, for a stock to stand amongst that and give you a 100% return. On the other hand, if the Nifty is going sideways or if the Nifty is on an uptrend giving you a 20% move, then there could be stocks which move 500% in that same time. So it's very important to understand what the broader market is doing, and that's what market breadth essentially presents us. So for me, what I use is for three strategic inputs. One is how powerful is the current move, which kind of determines what kind of position I have open, right? So if it is a strong bull move, I would have anywhere between 7 to 10 positions open. On the other hand, if it is a market which is starting to turn around, I might have a couple of pilot positions open. I won't be, I'll always go for progressive exposure. And this is a tool which helps me for that. And it is a very good, reliable predictor of when the turning points are going to occur, right? So if a move is, and this usually happens at the extremes of market breadth. So if the market breadth is high for let's 2 or 3 days continuously and it is going like mad, it's natural for the market to settle. So maybe it's time to lock in some profits, right? And before I start on the topic, I want to attribute this video to two people who have learned this from the most. One is Manas Arora. As you may know, he's an Indian stock market trader. So I learned concept of market breadth from him in the bootcamp. And Mr. Pradeep Bonde, also known as Stock B, who is a US trader, a very successful one. And I've also learned his concept, and what I have done is merely extended their ideas to suit my style of trading. So I haven't invented anything here. All credits to them. And you can see the comments for, you can see the description of the video for the links to their work on this and their definitions of market breadth. Now, it's very important to understand the context in which I'm talking. So I am a trader who trades in terms of equities. I have breakout technique. I have a reversal technique. That's what I do for stocks which are mid cap, small cap in nature. And I do trade options of index and F&O stocks mainly for intraday trading. So because I need to have a cash flow, as I'm a full-time trader. So, and as any swing trader will know, successful swing trading is a seasonal business. So there will be periods where you will need to sit out of the market, and the market tool really tells you when to sit out and when to get in. But I'm at a phase where I am generating my income from trading, so I have to have my cash flow. So I trade F&O stocks for intraday when I don't see a swing trading opportunity. So let's now get into the topic. Now let's get into some examples right away. So I'm going to take a few examples. So if you see the first month of Jan 2022, you can see how the market got a bit overheated, and towards this date it was really high bullish values if you read these columns, right? So it was logical to expect that a reversal is coming soon, and surely it did happen, and the market came down by 8% from the 18th Jan high it made. If you look at the index charts also, you can see a lot of small candles going up, which was also an indication that the move is getting tired, right? And the next example would be again in the next month, that's in Feb. If you look at it, there was a extreme bearish readings, right? When you look at 23 is this is really extreme reading. 12 is really extreme reading, right? But you're getting an early signal of stocks trying making a recovery. So this is an excellent situation for reversal trading, right? And that's exactly what happened. The next day itself, single day, index moved up 3%, and the total move was 4%, but the index moved up 3% from on a single day. And there was I could open a few reversal trades that day and close all of them in mega profits the next day. So this is when the even in a downtrend, when the bearish readings go to an extreme, there will be pullback, and we know that pullbacks in a bear market can be very vicious. So this is the perfect setting for reversal trades. The month on April, so of 8th, 7th, 8th, 11th, we saw extreme high readings. So we need to book profits in this case, and we came out, and we did not know that it was going to crash so much, but in the end it ended up going down 11% from that point on the index. So stocks more obviously. So now just to summarize, we saw what market breadth is, what are my 3 strategic objectives that I look for in market breadth, and some examples of how this tool has helped me protect my profits and do my think that the video was valuable to you. Please do share, like, subscribe. Otherwise, no issues. Thank you for your time, and I hope to see you in the next video pretty soon. Bye bye.